Hello guys, this is SyntheticGoddess. You're welcome to this video. In this video, I want to quickly explain a strategy that really works. If you follow the process and you follow all the rules, you're really going to enjoy it if you can be able to do that. So follow me to the end of this video so that you can grab one or two things and then you can apply it to your daily trading life. Okay, so what is this strategy? I learned it from one of my mentors, Mentor FX, and then he actually called it 3-box strategies. But then I'm going to give an explanation to it right now. I'm just going to explain it, and once you're able to get that concept, definitely you're going to make profits. Like, you're really going to make profit, and you will have less of losses and more of wins. So this is how you just need to analyze it. It's just basically on three things, and that is how the market works. The market works just on three basic things. Once you're able to know these three things, then you're very good to go. The first one is knowing the story, that is knowing the structure. What is the structure of the market? What is the current order flow on this pair I want to trade? Then the second one is knowing your zone. Knowing your zone, most people just max out every zone. You just mark out any zone, and then you feel the market will actually get to this zone, and then at the long run the market just moves and leaving you behind. You understand? So you really need to follow this concept so that you can actually catch moves in the market, major moves in the market, and you're very good to go. So that's the second thing, knowing the zone. You are not just marking out every zones you see in the market. You know the zones you are trying to mark out. Then the third one is knowing your confirmation. What is your confirmation? If you are able to get these three things done, then it is very, very good. Your trading life is definitely going to change, and your trading strategy is going to change. So you can add this to your journal so that you can always go back and refer to it. So the first one is the story, which means the structure, knowing the structure. The second one is getting your zone, and the third one is having a confirmation to prove that the zone is valid. So what do we mean by the story, which is the structure? What we mean by the story is the order flow. Where is your last break of structure? Your last break of structure, you need to mark it out. After marking out the last break of structure, I'm going to be doing this particular one on the 4-hour time frame. I'm going to be marking out my structure on the 4 hours time frame. I'm not going to go to the weekly time frame right now. I just want to analyze as an intraday trader right now. So I'm just going to mark out my story from the 4 hours time frame. Like, where is really my structure? Where is my structure? So I haven't marked this place out. Let's just start from this place. Yes, let's just start from this place. So this is a break of structure to the downside, and where actually is my zone? Which zone am I marking out as a valid zone? So definitely I'm marking this particular order block, this move to the upside before a move to an impulsive move to the downside. So I am marking out this as my order block. I'm marking out this order block. So having marked this out as my zone, what is my confirmation? Now this is where a lot of people are getting it wrong. You don't even know what confirmation you're looking for in the market. So your confirmation should be either Wyckoff or patterns. I'm going to repeat that. It should actually be Wyckoff or patterns. That is what your confirmation should be. Now, if you don't really know more about Wyckoff, I'm going to really tell you to look into it, because it's going to help you. It's actually a strategy that will help you to know where the market has gotten to and how you should react to that zone the market has gotten to. And when we have Wyckoff in the market, it simply means a struggle back into the PO high. we'll have a struggle back into the PO high. The market just moves in such a way that it is very, very slow back into the PO high. You would actually think your PO high is not going to hold, but at the long run, Wyckoff will just display its schematic and then tap into the PO high and then start dropping or start moving to the upside. So you really need to know about the Wyckoff. You really need to know about the Wyckoff. So if you don't know about it, you can check videos on it, or personally I'm going to make a video about Wyckoff so that you can have a deep understanding about Wyckoff and how you can use it in the market. So why this place is being marked out as my PO high is because, as you can see, we had an impulsive movement to the downside immediately it was created. We had an impulsive movement to the downside after it was created. So I have a very valid gap. After the PO high, after that zone was created. So I'm looking at this as valid. I'm looking into it as a valid zone. I'm looking at that PO high as a valid zone. But see what the market actually did here. Market did not tap back into it. Market did not tap back into this particular zone before breaking to the downside. Again, we have the break of structure to the downside here. So since we've not tapped into this place, and the market has broken another low, so I just mark out that low that the market has broken, and then I mark out the PO high that is there. So simply the market broke this particular low, and where is my PO high? I am marking out this place as a PO high. I'm going to refine this particular place to 15 minutes or 30 minutes. So let's just go to 30 minutes and see how we can actually refine that on 30 minutes. So you can see this on 30 minutes. Let me mark out the very valid gap that we had on this 30 minutes that confirmed us that that PO high is going to might hold. That is confirming us that that PO high is in a way valid. So we had a fair valid gap here. We had a fair valid gap, and after the very valid gap, the market respected the very valid gap. But personally, I am marking out this particular other block as my zone. This particular other block as my valid zone. Most often the market just leaves very valid gap and enter into other block. So as you can see, this particular candle, if you check on the 15 minutes time frame or the 5 minutes time frame, is a valid order block because it was a move to the upside before this drop. So that is the candle I am marking out. It is my interest candle. This is my interest candle over here. This is where I am focusing my attention on. So I just mark that candle out and then wait for the market to get into that zone, and I just wait for a confirmation, either a Wyckoff or a pattern, and I pick my trade. So as you can see, the market got into it. The market got into that PO high, and then it gave this movement. There was actually a Wyckoff schematic here, from here up to this PO high here. Up to this PO high here. Retail trader will actually call this place break of structure, but then we know what we are looking out for here. We've marked out our PO high, and also I'm going to so we actually broke this particular low again to the downside. So you can see, in case you see this kind of move in the market, and so you don't get confused, you don't confuse this one as a break of structure. I said it in one of the videos that I have made before, that whenever we've not tested a particular zone, a valid zone, whenever we've not tested it, just expect the market to come there and give a reaction or move from there. All you just need is a confirmation. So I'm not going to really call this place a break of structure, since this one has not been broken. This zone has not been broken. This zone is still an untested zone. So breaking this market, breaking this high is just more like, it's just more or like a liquidity break for me. This is more like a liquidity for me. So breaking it is more like a liquidity for me. And also the market looks kind of choppy over here. So all I just do, since this place since we break market structure to the downside over here, we violated this one, what you need to do is just mark this place out as your zone also. And as you can see, the market respected it duly. The market respected it over here. See the zone, see that zone here. But remember, we marked that our PO high from 4 hours time frame. But then if you want to study it also, you can come to 15 minutes time frame. See how the market respected it. In fact, it gave us a good confirmation that we will move to the downside, and the market moved to the downside. Meanwhile, since before the market even got there, you would have broken even. You should have broken even. See the kind of move the market moved. See the move the market gave us. See that move the market gave us. Even if you are targeting this particular low, the market would actually not stop you out. If you are targeting this particular low, they are targeting this low, that whenever the market comes, it should just take out this low, then you are out of the market. But see what the market did. It tested a place here, but it respected this PO high. Based on, we had a break of structure to the downside, we marked out our zone, and then we had the confirmation. We had a struggle back into the PO high. We had a struggle into this PO high. If you check, let's just check the 5 minutes time frame and see what the market just did. Here you can see we had a struggle back into this PO high. We had a very tough struggle back into the PO high. So if you in fact entered for a buy, for a sell here, if you entered for a sell here, by the time the market has gotten to this place, you should have broken even. You should have broken even, because we are going to classify this as a minor break of structure. We are going to classify it as change of character. We'll classify this as change of character. So you should have broken even. Since we had change of character over here, you should have broken even, such that when the market just comes back up and takes you out, you are not losing anything. You are not losing a dime cent. You are not losing anything, since the market comes back to come here to take you off. You are not losing anything. So you just wait for the market to display itself. You are not entering the market again until we go to our untested zone. Until we get to our untested zone. And when we got to our untested zone, see what the market did. When we got to our untested zone, the market gave us a pattern. See that pattern. We had the M pattern. We had the first leg, we had the inner move, and then we had the other leg that couldn't break the previous one, which is more like our third M pattern, where we have the low that are not up to each other. The second leg is not up to the other leg, which is the first leg. So this is an M pattern. You could just have entered the market at the test of this, or you enter the market here. You enter the market here. The market gave another re-entry here. Even if you had not entered a market there, you could follow the same process again. We have the break of structure to the downside here. We have the break of structure to the downside here. Where is your good supply zone? All right, you just mark out your supply zone, which is over here. After marking it out, the price did not get into that supply zone. We had the break of structure again to the downside here. You mark out your supply zone here. The market tapped into that supply zone and moved to the downside. You've joined the market. So even if you are a scalper, you take out your TP, you take out your profits here, then you wait for the market to come back into a supply zone. Here we have the break of structure here, the market come back into a supply zone, then you TP at the low again, then you continue that movement. We have a break of structure to the downside. You mark out your supply zone. The market did not get into the supply zone, then we had the break of structure to the downside again. You mark out your supply zone. The market tapped into the supply zone and moved to the downside. We had the break of structure over here again. This is our supply zone. The market tapped into the supply zone and gave a very, very good reaction to the downside. We had a good move to the downside. You would have broken even before the market picks you out over here. Now, when the market takes you out over here again, now the basic reason this moved to the upside is because of a demand zone, a strong demand zone this was resting on. That was why we had to break this particular high to go and test a place that has not been tested before. So we had a very, very good reaction at this point, and since we had a good reaction at that point, you just say this is a break of structure to the upside. This is a break of structure to the upside. You look for your demand zone over here, you move to the upside, and you wait for the market to give you a sign again. You wait for the market to give you a good sign again. Once you are able to do all this, this is a break of structure to the downside. This is a break of structure to the downside. The market didn't get to this supply zone, so we had another break of structure to the downside. The market got to this supply zone and we moved to the downside. We had the break of structure here. The market didn't get to this supply zone here. The market did not get to the supply zone over here. We have a break of structure to the downside here. The market has gotten to this supply zone and we are moving to the downside, and the market might just react to this zone and move to the upside again. It all depends on what the market wants to do, but just follow the market as it breaks structure and as it moves to the downside or to the upside. You can see we have a break of structure to the upside over here. After breaking structure to the upside, this place came back to test this particular demand zone and we moved up. So that is just the strategy is very, very simple. If you can take your time to just study it and see how the market moves and see the patterns that you really need to watch out for whenever you are picking a trade, just watch out for that patterns to display itself and you are good to go. So that is that for that. Kindly just study this and then you're going to see that it works most often, not all just on this pair. We have different pairs it works out on. You can go to any pair and then just mark out the break of structures. You mark out a zone and then you watch it, you watch out how it's going to move. You get your confirmation. You don't enter a market when there is an impulsive movement. As you can see for this particular pair, I saw this move to the upside, but I couldn't take it because I was on a call. We have the break of structure to the upside here. We had our demand zone over here. The market really tested the demand zone. This market would have hit my TP if I had entered, because I wouldn't stay so long in the market unless I am seeing something else on the higher time frame. So this would have been a break of structure to the upside again. You get your demand zone over here and you enter the market. So that is that on that. So that is all on this strategy, guys. Just check it out and then you're going to see good things on it. Definitely you will make profit on it if you follow all the procedures. Thank you.